Continuing with section 2.2 and the last three transactions, just as a reminder, we have 4 questions that we ask each other every time we have a transaction. And this transaction is paid cash for insurance. And the first question is, which accounts are affected? So when we paid cash for insurance, we're going to have cash and prepaid insurance are both going to be affected. If you remember, prepaid insurance is paid ahead of time. That's why the word is called prepaid. So it is an asset for us until we use that insurance. And so our 2 accounts, cash and prepaid insurance, how are they classified? They are both assets. We own them. How is each classification changed? Does it go up or down? Well, when we know that when we have both accounts on the same side of the accounting equation, that one has to increase and one has to decrease. And so in this example, our prepaid insurance is going to go up because we're going to add to that balance, and we are paying cash. So when we pay cash, cash goes down. We've also learned that debit means left, credit means right. So since prepaid insurance is increasing, it increases on the left-hand side because assets are on the left-hand side of the accounting equation. So prepaid insurance is going up with a debit. Cash is going down with a credit. So prepaid insurance and cash are affected. Prepaid insurance and cash are both assets. Assets, prepaid insurance is going to go up, and the asset cash is going to go down. Prepaid insurance is debited, cash is credit. The next transaction, bought supplies on account. In this particular account, you are going to a store or online and you are buying some supplies for your store and you're going to pay for them at a later date. So you're buying them on account. So that is going to be supplies. Our supplies, like our pens, paper clips, those kinds of things, our supplies account are going to increase. We own them because you can return them and turn them back into cash. So they are something you own. They are an asset. And then we owe Canon office supplies $220. So that accounts payable, we're paying them. It's an account we're going to pay, which is a liability because liabilities are things we owe. That is going to go up also. So in this transaction, we have supplies and accounts payable. Canon office supplies are the 2 accounts affected. How are they classified? Supplies is an asset. Accounts payable is a liability. The asset is going to increase, so it's going to go up with a debit. And the liability is also increased, and it goes up with a credit. Let's review that real quick. Our accounts payable account is a liability. Liabilities are on the right side of the accounting equation if you go from the equal sign. And if you remember, debit means left, credit means right. So liabilities will increase on the right-hand side of our T account with a credit. And the last transaction, paid cash on account. In the previous transaction, we bought supplies on account. Now we're going to make a payment on those accounts. And so we're going to pay off a little bit of what we owe. So we paid cash. We know that when we pay cash, cash goes down. Cash is an asset. And we're going to pay off a little bit of what we owe this accounts payable Canon office supplies. So it is also going to go down. Remember, again, also when the transaction affects both sides of the accounting equation, they move in the same direction. And in this particular example, they both go down. So cash is an asset, accounts payable is a liability. Cash goes down with a credit because it's on the left-hand side. So it's got to decrease with the opposite, which is the right, which is a credit. And the same thing with liabilities. Liabilities falls on the right-hand side of the accounting equation. So it increases on the right and decreases on the left. And again, just a reminder, credit means right, debit means left.